Welcome to today's market update. I'm Maya Keynes, joined by financial expert Eli Sterling. Good morning, Eli.
Good morning, Maya. Great to be here.
We've got quite a packed session ahead. Let's start with some headlines shaping today's markets. First up, unemployment in the U.S. rose to 4.3% in August, the highest since October 2021. Youth unemployment hit a staggering 10.8%. What does this mean for investors?
Well, Maya, while rising unemployment might seem alarming, it's not necessarily bearish for financial markets. In fact, as one analyst pointed out, economic uncertainty could actually fuel the next crypto bull run, especially when you factor in how AI is displacing jobs. Productivity gains from automation are keeping GDP strong at an estimated 3% growth this quarter.
Interesting angle. Now switching gears. Brazil is trying to challenge China's dominance in rare earths, a sector critical to tech manufacturing. China controls about 60% of global supply and nearly 100% of heavy rare earth processing. Can Brazil really make a dent?
It's ambitious, but Brazil still has a long way to go. They have massive deposits, yes, but they're years away from meaningful production. Right now, China uses its control as geopolitical leverage. Until countries like Brazil build out refining infrastructure, they'll remain dependent.
Let's turn to the crypto space. A recent video titled The Ultimate $10,000 Altcoin Portfolio suggests allocating $5,000 into base assets, $3K into mid-caps, and $2K into smaller plays. Some projects are delivering eye-popping returns, like WorldCoin seeing 100% in just 1 week. Is this kind of aggressive allocation wise for retail investors?
It depends on your risk appetite. Diversification makes sense, especially in volatile sectors like altcoins. But remember, even top-performing coins can pull back quickly. Staking rewards help cushion losses. Some users report earning 36% APY on certain holdings. Still, always keep cash reserves for rebalancing and avoid putting all eggs in one basket.
Thanks, Eli. Speaking of technical analysis, let's dive into Ethereum's weekly chart using the stochastic RSI strategy. Eli, walk us through what we're seeing.
Sure thing. On the Ethereum USDT weekly chart, stock RSI is showing strong downward momentum. It dropped from 77.41 to 40 over 5 weeks. That tells me short-term pressure is building, although it hasn't hit oversold levels yet, which means more downside could come.
And what about trend direction?
Despite the pullback, the ADX shows a gradually strengthening uptrend. Plus, the golden cross between the 50-day and 200-day SMAs confirms that broader sentiment remains bullish. So, while we see near-term weakness, the big picture still favors buyers.
Now looking at Solana on the daily buy-hold-sell indicator, we're seeing consistent gold signals and accelerating bullish momentum. Your thoughts?
Absolutely. Sol USDT has shown impressive strength lately. The buy-hold-sell indicator shows V1 consistently above V2, with widening gaps suggesting growing confidence. This isn't just noise, it's real buying interest pushing prices higher. I'd watch for dips as potential entry points if you believe in the longer-term upside.
What about Link? It seems caught in a tight range based on Fibonacci retracement levels.
Exactly. Link USDT is hovering between the 50% and 61.8% Fibonacci zones, indicating consolidation after a solid rally. The buy-hold-sell indicator supports a bullish view, but volume and RSI tell a different story. They're hinting at fading momentum. Traders should prepare for either a breakout above 61.8% resistance or a drop toward 38.2% support.
Turning to Ripple, XRP's been bouncing around key Fibonacci supports too. How do the indicators align here?
XRP looks mixed. The buy-hold-sell indicator gives a bullish read, but the zero-lag trend shows price below the moving average, signaling short-term bearishness. Also, RSI dipped below 60, and Stoch RSI retreated from overbought territory. Combine that with low volume, and it looks like traders are taking a breather.
Finally, let's check Avalanche. AVAX is holding firm above key Fibonacci retracement levels and showing strong bullish momentum across multiple indicators. Any concerns there?
AVAX is indeed flying high. Price sits comfortably above the 23.6% retracement level, and both MACD and RSI confirm strong upward momentum. However, prolonged overbought readings raise caution flags. We may see a brief consolidation before any major push higher.
All right, let's wrap up with our key takeaways. Unemployment data sparks debate on whether it's bad news or a prelude to a new bull cycle. Brazil's efforts in rare earths face steep competition from China. And in crypto, diversified portfolios and disciplined strategies appear essential amid mixed technical signals. Thanks, UI.
You're welcome, Maya. Keep watching those volume trends in Fibonacci levels. They'll give you early clues tomorrow.